Good afternoon. Today is November the 1st and second day of the week. And we want to begin a new week with a fresh outlook on the various markets. And the time locally in Singapore is just after noon at 12:06 p.m. Now, overnight, we have seen the US equity did not take out a new high. And basically, for the month of October, it has been a remarkable month because overall, we have seen the Dow Jones especially having the best performance month in over 40 years. You can see that this market has been practically been charging higher and higher, practically on a daily basis after achieving a year low at the end of September. So there was a remarkable turnaround in sentiments market in the Dow Jones, even took out the September high of 32,504. So this is pretty remarkable, and it's also a confirmation of my earlier view all along that the capital flow moving into the United States has all been parked into US blue chips. That is the reason why Dow Jones has been relentlessly been bought up, whereas the other major equity index such as the S&P 500 and the Nasdaq did not follow. Okay, so it's very obvious the reason why the Dow Jones has been so bullish this past month has been the fact that a lot of overseas funds are being parked in the United States and they have all found shelter in US blue chips. If the war in Ukraine escalates, we can see even more capital flowing into the United States, and maybe that will be also a continuation of what we are seeing in the Dow Jones. But the bullish sentiment right now have to overcome the midterm election, which is scheduled for November the 8th, which is next Tuesday, 1 week from now. And personally, I have a different take, and I believe last week we have heard reports about Nancy Pelosi, which is third in line in the power structure of the American body politics behind the president and the vice president. Next in line would be Nancy Pelosi. Her husband was brutally attacked at home. Fortunately or unfortunately, she wasn't home at the time. But that attack, is very obviously politically motivated. Because the supporters of both parties has been so worked up over what is happening over the last 2 years since Biden came to power. Okay, we can see that the polarization in US domestic politics, which is so toxic to the point where I believe personally, whatever the result that comes out on the November 8th midterm election is not going to lead to either party being happy the results, and that could have knock-on consequences as far as the supporter is concerned, because if the attack on the Nancy Pelosi husband is anything to go by, it is a symptom of how bad the politics has become very, very personal. Okay, and we will have to see. 1 week from now is not too far, and from now until the midterm election, maybe the bullishness that we see in the Dow Jones may actually extend all the way until that election date. But once that election is over, okay, it is anybody else's guess. If it leads to a civil unrest, which is very, very likely, because no party is going to be happy with the outcome of the results, and it could end up spilling into the streets. Okay, and if that happens, that is a negative for equities. So do be very careful. If there's going to be more upside potential, it is a carry on of the current very bullish sentiment seen in the Dow Jones. So do watch out for the Dow Jones. I think the obvious target to aim for will be 34,281. Okay, this is the August high. Okay, you have taken a September high. Now let's see whether it can surmount the August high. So for any trend to actually turn, we need 3 months of confirmation. If you go to the monthly time frame, each time the market turn around, you would have to take out the preceding 3 months high. Okay, so we have taken out 1 month high, and now the next barrier to higher prices is the August high. Then after that will be the July high. If they can actually do that 3 months consecutively, then we are safe to say that the trend has actually shifted. The market has turned around, and from that onwards, this is the confirmation that we're going to get. Of course, it will be totally useless for those who are trading short term. For those who are trading short term, you have to go down to the lower time frame and take your perspective from there. But I'm just saying, on the longer time frame, this is how I look at markets. Okay, so this is the first month. We have to watch whether the August high at 34,281 can be surmounted, okay, which can be a barrier to higher prices. Over in the September, in the S&P 500, the market, of course, yesterday did not register any new high, but for the month of October, it did well enough to register a high of 3,905 on the back of a new low traded at the end of September at 3,491. So this is also quite a remarkable turnaround in fortune. However, if you compare that to the September high of 4,119, it is still a distance away. So the clue here is Dow Jones has taken out the September high. S&P 500, the other broad-based index, did not even come anywhere near the September high. So this is a sign of the underlying weakness and also a confirmation that the money is in the Dow Jones right now and not in the other equity index. So this is very, very telling. Okay, so for the market to actually challenge the September high is still some way from where it is right now. From now until next Tuesday, I think this will be the target, 4,119. The Nasdaq 100 is even more telling. Now, the Nasdaq 100 high was not registered last Friday, which is not the case for the Dow Jones and the S&P 500. The high was actually registered last Wednesday at 11,681. And where it closed, yes, it has also rebounded off a year low at 10,440, but it has been less aggressive, okay? And if you measure this where the market is right now, market closed at 11,405 last night, and where it need to be to take out the September highs at 12,752, it's even further than the S&P 500. So by and large, we can see that Nasdaq 100 is the weakest link. So if the market finally exhausts itself on the upside and starting to come back down, this again, I like to reiterate, will be my index of choice to go back to sell short. Okay, over in the Asia market, we can see that the Hang Seng yesterday registered a new year low at 14,597. Today we have a bit of a rebound, but it doesn't seem that it is holding on to its gain so far. We can see the 60 minutes time frame. Initially it did go up. Okay, now it seems to be pulling back a little bit. So by and large, you can see that the Hang Seng itself is pretty weak. This is not a market I want to sell, not at current price. But I don't see any robust rebound. Okay, so by and large, we just watch, monitor. Obviously, at this level, I'm not going to buy, and obviously at this reason, I'm not going to sell because it's pretty low prices. Okay, so I'm just going to watch. It's not a market that I want to get into at this moment in time. Over in the Shanghai Composite, yesterday we also have a low, but this is not the year low. The year low is actually traded sometime in April this year at 2,863, but at 2,885, okay, on Monday, which is yesterday, this is getting very, very close to the year low, and it does appear that this yellow may not be able to hold the onslaught of selling that we have seen in Chinese equity. Even after the 20th CCP Congress, we can see the market perception of Chinese equity is not good, and this sentiment is likely to see that the yellow at 2,863 eventually will be taken out. We still have 2 more months before the year end, and it is highly likely that we may see this particular index, the Shanghai Composite Index, if it's not closing at the yellow, or you will be pretty close. Okay, so this market is pretty weak right now. Okay, over in the Nikkei 225, we have actually seen on the 60 minutes time frame this very short-term support line. Okay, that seems to be working, and the market is doing a 3-wave recovery. And today we have so far seen the market go back to 27,627 right now. And I think it is on the way to hit the 28,000, which is all the while been my medium-term target. 28,000 to 28,500 thereabout. So this is my pocket. I think the market will be aiming for. Over in FX, we can see the dollar yen. Now let's go back to the 60 minutes time frame to get a better look at the price movement. We can see that the dollar yen, after coming under selling pressure because of BOJ intervention, near the 152 have come down all the way to 145, 48. Sorry, before that was 146.16. bounced to 149.71, dropped back to 149. So they completed the initial three wave. But on the larger time frame, I think there is a bigger three wave that is in play also. And this means that if the market take out this very near-term support line, okay, it may actually gun for 144, even go down as low as 142 half. Okay, so this is a bracket of prices which I think if it ever come to those prices, it will look very attractive to go back in to pick buying positions again, because I do believe the dollar strength story is not over yet. Okay. Now, this is the sterling. Sterling, of course, has come down under a bit of selling pressure. Last Thursday, it actually hit a week's high of 1.1645. Now the market has unfolded in a three-wave pullback, and there is every likelihood that the pullback it may actually extend a bit lower, ideally to the 1.135 to 1.128 level. This is my ideal level. Okay, so we have to see whether in the afternoon or over the next few days, market can actually drift lower. If it does, I think it may be worth a while to consider taking a very short-term outlook for the possibility of another surge to take out the 1.1645. If that is the case, let's refer to the higher time frame, which is the daily time frame, for where the market may actually go. If the market take out 1.1645, I think logically it will hit for 1.2060 to as high as 1.24. So this is a pocket of opportunity. I know the range is a bit wide, but if you can buy somewhere near the 1.135 to 1.128, I think this does give us a incentive to go for this move. Even for the lower end of the target at 1.2060, it is still quite a substantial move here if it ever unfold the way I think it will. Okay, so this is a market, because the whole idea is this. I'm not so much bullish on sterling pound, other than the fact that the dollar currently is under a technical pullback. Okay, if it's a technical pullback, I think it's healthy for the dollar over the longer term, because the market cannot keep on going up, without taking a break. So the market now is taking a break, which is healthy, so that it can actually take a breather for it to build a base and then to take up higher levels. So under the condition that the dollar is having a technical pullback, allows the other currencies to also go up. Okay, so this is like a seesaw, right? All the while it has always been. Now, over yesterday, we have seen the Eurozone released their GDP numbers. It was terrible. Okay, on a year-on-year basis, the previous quarter was 4.1%. Q3 was half of that, 2.1%. So it is really, really bad. Okay. And then on the inflation front, the harmonized index of consumer prices for the Eurozone wide, okay, is at a record high. It has taken out the 10% ceiling, went all the way to 10.7%, which is a record high. So on the condition whereby you can see that the GDP is shrinking very fast, okay, and then we have a surge in inflation that looks like it is out of control. So under this operating condition, it is the worst of both conditions. We have slowdown in economic activity, we have a surge in inflation. So I think this will eventually affect its currency value. Right now, the euro dollar has actually rebounded off the low, okay, to as high as just above parity before it comes under selling pressure. But because the dollar right now is having a technical pullback, it may thus allow the euro dollar to actually rally a little bit more, okay, maybe even take out the most recent high at 1.0094, okay. And if this is the case, then there is a possibility that it may extend a bit higher, although technically this three-way pullback has already achieved its target. So between euro dollar and sterling, okay, cable, for me to want to go in to do a counter trend buy for in expectation the dollar is going to likely to continue to correct downwards. Between euro dollar and sterling, I think sterling is a lot more safer compared to the euro versus the dollar, because technically it has already done a three-wave pullback. It has hit its target of parity. Now it's pulling back, and yesterday's GDP numbers as well as the inflation numbers does not give you any reason to go in to buy. Okay, so between the two, like I said, I would prefer to go along counter trend in the sterling rather than the euro dollar. Okay, over in the Aussie market, we can see the market is also pulling back from a high of 65 cents. Yesterday low was at this morning low, sorry, it's at 63.68. Okay, so the market has pulled back a little bit, also in a three-wave pullback. There is always a possibility it may unfold into a larger degree three-wave. So possibly, if the sterling pullback is not over, there's a possibility that we may see Aussie dollars pulling back a little bit. So if that happens, that could actually give us another chance to trade the counter trend for another burst higher. Over in commodities, let's take a look at crude oil. WTI crude oil actually will register a fresh low I would say for the week, okay, at $85.30 last night, but it unfolded from a high of $98.79 in the three-wave pullback. So technically, it has already hit its target, and then we followed by a relatively strong rally. So right now, this rally is at the midpoint of this rising channel. So I will need prices to close above this channel, at least in the short term, for it to actually have a chance to challenge the $89.79. Now remember, at the end of September, OPEC Plus actually has an agreement to cut production as much as 2 million barrels a day, and that is effective today, November the 1st. So under that condition, it should allow prices to go back higher. The only reason why the market has been coming down is because China's economy appears to be shrinking. Okay, we are looking at their PMI numbers yesterday. Both the manufacturing and non-manufacturing PMIs was even worse than market expected. So they are all below the 50 marks, meaning it is contracting. So under the condition, because China is one of the largest buyer of energy products anywhere in the world, so that gives rise to the idea that if the biggest economy that buys the most energy products, okay, economy is shrinking, so there'll be less demand. So that was the story behind the slide in crude oil prices. But again, the counteracting fundamental is the fact that OPEC Plus has cut production massively to the point of 2 million barrels a day, and that's a lot. Okay, so that should actually stabilize prices, and all we need now is just some good numbers, and the market should be primed to go even higher. However, the disappointment comes from the fact in the precious metal did not benefit from a dollar that has decreased in value. The dollar right now is undergoing a technical pullback, but that did not benefit precious metals in any big way. In fact, it has actually gone lower last night to 1,630 in the spot market for gold. And this is a little bit disappointing, because in a condition in which the dollar is strong, precious metal prices cannot go up. Now that the dollar is coming back down even on the technical correction, precious metal like gold cannot rally significantly. So this is a major disappointment. So we will continue to watch this. I'm still very long on gold. I'm also still long on my crude oil, by the way. So silver actually have a better outing last night. We have a low of $18.90. It unfolds in a three-wave. Now the rally from that low is a lot more robust than what we are seeing in the spot gold prices. So maybe if silver prices can actually maintain its short-term sentiment to go up, hopefully it will take gold along for the ride, and maybe gold may benefit from higher prices in silver. Okay. If you look at the crypto space last night, the crypto space actually see wholesale pullback in prices except for one coin. So we will go to that coin eventually. The high traded was on Saturday in Bitcoin at $21,078, and since then the market has been drifting. And yesterday we have a rather relatively sharp pullback all the way back to 20,000. Okay. 20,243 was the low, but you see the low, the Aching market is actually hoping it will hold is at 20,000. So by and large, I think there is a possibility it may drift lower, perhaps to even retest the 20,000 levels. Okay, so far, I think this is about the only invincible line that's holding the market up. I do believe the rally from the 18,183 seems to be still unfolding. Maybe the market is taking a breather before it go higher. My immediate target is 21,500 to 21,200 levels. So this is still my immediate target. Over in Ethereum, it has a better outing. You can see that the structure of this rally from 1,155 is a lot more aggressive. The high trader was on Sunday at $1,662.80, and it has pulled back in a three-wave. Yes, the current low in Ethereum appears to be at 1,545. Okay, there is the possibility it may even drift lower, ideally to retest the 1,480. That will be a much better comfort, a much more comfortable level to actually attempt to go long, because I do believe there is still a bit of an upside left, because based on the structure of this move. Okay, Ripple was a disappointment. Ripple did not go anywhere significantly. In fact, it has taken out a rising channel. But by and large, you can see the market is consolidating. Okay, and this is not a candidate to actually sell. I am not in favor of selling this coin, because the verdict is still pending, and I think the verdict will actually be a positive one. So this market, just this particular coin, I'm just going to watch. Not going to take up any aggressive position pending the verdict. Okay, over in Cardano, we also see the Cardano is really not the main coin. It has no major fundamental driving it. Okay, we can see that the Cardano actually registered a contract low at 33 cents before pulling up to 44 cents on Sunday, and since then it has been drifting. At most, I think it will come back to test the 38 cents level, and then hopefully from there it may actually find a base for it to go higher. But by and large, I will not put too much emphasis on Cardano, because the actions are all centered on Ethereum. So watch Ethereum. The other coin that actually has a very positive outing yesterday is this particular coin. This is called Binance Coin. Now, Binance Coin actually invested in Twitter. Okay, and because the Twitter has been successful, the Twitter deal by Elon Musk has actually been concluded, so that gives the Binance Coin the kick higher. So it has that rock on effect because of the Twitter deal. Okay, so we can see Binance Coin went up to a high of $337.90, and it may pull back a little bit. The most conservative is a pullback back to $320.30. Ideally, go back to test the $310. If that can be done, I think it is getting ready for another run up, because you can see that the low of $256.70, this pull up here has been very aggressive, and we need a little bit of letting off of the air for it to come back down, so that it have enough energy to go back up again. So the other coins are basically just drifting, okay, taking the lead from Ethereum basically. So this is all I have for you for today. Do watch out for tomorrow FOMC meeting, which is going to be in the early morning at 2 a.m. Singapore time. Okay, at technically that will be November the 3rd. Okay, so we will have to watch for the FOMC, which is the Fed is widely expected to hike interest rate by 75 basis points one more time, with the fourth time. If you ever do that, that'll be the fourth time we are seeing a 75 basis point rate hike. It is totally unprecedented. We have never seen the Federal Reserve continue to hike interest rate at such a quantum. So particularly every month or every other month. Okay, so there you have it. I shall see you again tomorrow morning. Bye bye.